Michael Burry just threw in the towel. Michael Burry has closed his fund, Scion Asset Management. This is actually similar to what he did in 2008 when clients started banging on the door demanding their money back, because even though Michael Burry ended up being right about the housing crisis, investors were pissed because they were losing money on these short position bets and they had not yet played out. That's one of the downsides, unfortunately, of managing money for other people. You could have the best strategy in the world and you could be 100% correct, but if you're wrong on your timing, investors are not going to give you the privilege of time. They want results or they want their money back. That's why most fund managers tend to just invest in the biggest names in the market as the core of their fund, because they don't want to risk really underperforming the S&P 500 or a benchmark like the NASDAQ, and then they end up getting screwed because people get mad, even if they could be right in the long term. See, dear investors, says Michael Burry, with a heavy heart, I will liquidate the fund and return capital, with obviously the exception for a small holdback for taxes and an audit, by the year end or the end of the year. My estimation of value, this is the big line right here, my estimation of value in securities is not now and has not been for some time in sync with markets. With heartfelt thanks, but also with apologies, I wish you well in your future investments. Contact my other PM if you got questions or you want money managed somewhere else. Sincerely, Michael Burry, portfolio manager. So it seems like he's sort of like exiting. He's out. Now, he did this in 2008. Still kept money though, still had his bets in play, obviously made money on his personal portfolio. And then in 2013, reopened his management fund. Instead of being called Scion Capital, like what he closed in 2008, he ended up calling it Scion Asset Management, which he just closed. Now, it's interesting because the letter is dated October 7th, but if you, October 27th, but if you actually look at Palantir's slump came just a few days ago when his 13F filing came out. You can see here that decline for Palantir really started over here on the, let's go to the unaveraged candlesticks right here. There you go. You can kind of see the decline over here. We've got a 8% decline on the 4th, a 1.5% decline over here on the 5th, and then another 7% decline on the 7th. I mean, even if Michael Burry timed this perfectly and exited his shorts on Palantir, somewhere here, the lowest closing price was 174. And if you actually look back over here to September 30th, the lowest closing price, or actually the closing price on the day was about 180, but it did get as low as 178. If you took the low of the day, it's possible that Michael Burry actually closed his shorts for lower than what he paid for them. But it depends when in the quarter he also bought those securities. Because if he bought them over here in July, or if he bought them over here in August or September, it's not entirely clear that he actually profited on what the media called his $900 million short. Now, the irony of all of that was that it wasn't actually a $900 million short. And I actually first covered this short on Palantir and Nvidia, and I said, I don't know, man, I feel like people are multiplying the actual bet he made by 100 again because of options, and the media gets this wrong all of the time. And folks, that's literally exactly what happened. Take a look at this. $912 million of put options as of September 30th. You even have the transcript over here that he showed up. I actually think what was happening was market manipulation. I strongly think he was getting out of his position by bagging on Nvidia and Palantir. Somebody trying to defend Palantir and Nvidia. And there are really three outcomes for this based on, frankly, what kind of investor you are. So the three outcomes of this are group number one, they look at this and go, bro, moon. Michael Burry was wrong again. Burry wrong again. He was wrong, he was right briefly, but he was also wrong with timing, right? But also wrong with timing. And therefore, we're going to the moon on AI. Then you've got this second group of people we'll talk about in the middle in just a moment, but then you've got this third group of people and they're like, bro, it doesn't matter. Even though Michael Burry folded, all this accounting stuff is still fraud. This is accounting fraud, because I read the comments that y'all leave. This is accounting fraud. This is bull crap. This is a scam. And this is really a reference to why are we giving, chips a depreciation curve of 6 years, maybe even longer in some cases. And I actually don't think that's fraud. I think that's just alignment with market values for chips. And it makes sense because if the residual value of your chip is still high a few years later, which we've seen with tensor processors or older NVIDIA chips, the A100s, H100s, whatever, then it makes sense to extend your depreciation curves. And my counter to this whole fraud thing is that you actually end up increasing your current expenses, which means you might actually be overstating what your expenses are today. Now, don't get me wrong. I actually think right now, while Michael Burry is wrong now, I think he'll probably be exactly correct in the future. Like, people will come back and go, damn, Burry was right. But not yet. Here's the SEC form where he terminated his fund. And if you look over here, he says he bought $9.2 million of those option contracts, not $912 million. And look at the dates on them. These are put contracts at 110 for December 17th, 2027 and January 15th, 2027. So his option bets were really set up to take advantage of a Palantir crash in 2026 or 7. So what's crazy is he's even telling us and forecasting that no, this isn't for a now play. This is in the future. Just like he expects depreciation curves not to really hit hard, or the rescheduling of depreciation curves not to hit hard until 2028, which is possible. He's basically trying to make a 2 to 3 year bet here in a market that is obsessed with daily performance charts and daily gains. That's what the market is obsessed with. So if you were investing with Michael Burry, you had like $1 million with Burry, and you look and you're like, dude, the S&P's up 30% or whatever from liberation lows, and then Michael Burry's down 30%. The delta there is like massive, right? It's crazy because in that case you would have $1.3 million. Instead you've got $700,000, right? $700,000 divided by $1.3 million, you might think is 30 plus 30, 60% of first. It's about 53% is what you would have. So you'd have 53% of what you would have, which is indicative of almost having a double. So it's even worse, right? Like, the underperformance is so bad, you actually underperform by 85%. Crazy, right? So when you, what's the takeaway of this? Like, what does this mean? Is Burry wrong? Again, if you watch my Burry video that I made where I broke down these depreciation schedules, he is wrong today. And unfortunately, when you're wrong today with your timing, you could be totally right about what's to happen in the future, but it just means you're wrong, and the amount of stress that comes from having clients banging on your door is often too much for investment managers. Take a look at this, though. There's a report here that GPT's quiet slump, Zuck's AI bubble warning. Basically, OpenAI CFO investors told private investors in OpenAI, so OpenAI's CFO said that engagement in GPT had softened recently, and part of that was due to recent content restrictions that they've had with children or mental health, suicides, otherwise. These are all rough things. The CFO is trying to blame this all on temporary issues that they say will be temporary, and that this softening trend is expected to, quote, reverse. But then it makes me wonder, no, maybe it's not expected to reverse. Maybe you're maxing out on your user base while at the same time you're also running ads on Facebook, or Copilot is trying to compete with you by running ads on X. These are ads we've seen pictures of. OpenAI is actively now running ads for their chatbot on Facebook, and Copilot's doing it on X. And we think, oh, well, it's normal for businesses to advertise. Of course. But they didn't have to until just recently. And it's sort of indicative of, oh crap, let's spend money to keep the growth going. Which means some of the big growth that you're seeing at these companies in expenses isn't all going into chips. It's actually starting to go into marketing. It's one of the reasons why I think there are big advantages for being a recipient to that marketing money, whether you are Netflix or Disney or YouTube, obviously which one you pick, topic for a different video. But this Michael Burry letter, where he tells us, hey, look, I'm shutting down, I'm giving people money back, is not, in my opinion, a fold that he was wrong. Obviously, in the short term, people are going to look at this and go, oh, well, I guess Burry's wrong. He probably just doesn't believe in it anymore. I bet you he still believes in it on a regular basis. And he's so frustrated that he believes he is right so much. He's just saying, I can't handle dealing with investors calling every single day anymore, wondering why we're outperforming until the bubble pops. Like, why don't we just admit we're wrong already, right? And in fairness, he's had a lot of calls. And here's somebody on X, Sensei on X, who put together this spreadsheet, which I thought was really interesting. They say in September 2019, he called an index fund bubble. Well, he was wrong about that in September 19. February 2020, he called for put options on the S&P 500 for a broad downturn. This was correct. December 2020 to January 2021, Tesla overvalued. Well, Tesla went up like 743%, so that didn't work out. Late January 2021, no more GameStop-like short squeezes. And then immediately after that, AMC skyrocketed. February 2021, the market is on from a knife's edge from speculation crash imminent. Well, that was wrong. We definitely still boomed in 2021 all the way through November when we peaked out some stocks in December of 21. February to March of 21, Bitcoin is a speculative bubble. Consider shorting. Bitcoin did end up dropping 28% in the short term, but hit new all-time highs later. June 2021, greatest bubble ever, he called. S&P 500 up over, or looking for a 50% crash. Still wrong, because the market kept going up in 21. He called for an epic crash from crypto, SPACs, and memes in full swing by September. This was right. He called this in January of 2022. That happens to be when I went bearish as well. And that entire year pretty much sucked until about the fourth quarter when you had sort of the bottoming out of the chips recession, which was great. It's actually when I had launched a fund in November of 2022 expecting this Nike swoosh recovery, which we got for, over 2-3 years now, which is phenomenal. And the question is, are we at that euphoric end of the tail now? Where do we sit? January 2023 tweeted sell, admitted he was wrong on that. That was an oopsie doopsies. Then what else we have here? That's a redo. January 23 tweeted sell. August 2023, $1.6 billion puts. Well, again, those are probably nominal, so divide by 100, right? So this is probably closer to like $16 million, whatever. $16 million of puts on the S&P 500 and NASDAQ. Positions contributed to underperformance. So he's been trying to pull off these shorts for a while on tech plays right here. This was so early in the AI cycle. And then puts on Chinese technology companies and NVIDIA amid slowdown. Mixed performance over here. Early 2025. I mean, NVIDIA's at all-time highs, so near all-time highs. So probably not mixed, probably down on both of those. So anyway, this gives us a little bit of insight into Michael Burry's situation. I think he is absolutely convinced that he's right. And it depends what group of person you are. Again, you're either thinking we're going to the moon or this is all a fraud. Those are the two extremes. And then the middle is he's wrong now, but he will probably end up being right in the future. It's kind of an interesting point of view. Now, if you actually look at his latest sort of imagery where he, how should you put it, tries to depict how he's feeling. There it is. Me then, me now. Oh well, it worked out. It will work out. He's basically trying to argue like, just got to give it time. We'll close the fund and we'll take what we've got left, pick up the pieces, and keep making bets against the bubble, so to speak. Well, let me know what you think in the comments down below.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.